Good morning, students. Good morning to all of you. Now, students, we'll be doing primarily now today the topic which is Happy Diwali to all of you. So our Diwali would be based on the lectures now. Primarily, that's primarily what our Diwali is all about. So therefore, now, students, let's start with this particular part, students. Over here, the general anti-avoidance rule topic, students, and after that the alternate tax regime. After this, the MAT is what primarily we are going to discuss, students, in this case. Very good morning to all of you, students. So, students, the topic on general anti-avoidance rule. Now, this is again a very important topic, and in all probability, this should hit your examination in this attempt. Now, students, there are multiple level of questions which is targeted in this topic, and you need to identify which is the question. Obviously, identification will not be a thing that you need to worry about it. The questions are outright, but I'll categorize the question. One of the questions, students, which they target in this context is that of the tax planning, tax evasion, tax avoidance, and one more thing, students, is the tax management. There are four things, students, actually: tax planning, tax evasion, tax avoidance, and tax management. So there are four types of the various aspects of taxes, starting with planning, management, avoidance, and evasion. The last category, students, which you all are aware, the tax evasion, that is something which you all are aware, it is illegal. So tax evasion always is illegal. So therefore, any case of a tax evasion, like for example, you can have an example wherein a underreporting of an income, in this case, or a bogus claim. These are some of the examples of underreporting of an income or some bogus claims which are being made. These are some of the examples of tax evasions. And as you all know, tax evasion is illegal, and because that it is illegal, students, all you know what would be the consequence on that particular point. That is all about the tax evasion. Now, in terms of tax planning is concerned, so what is the tax planning, students? Now, the law itself provides you that if you do this, you'll get this, and you are adopting a fair means. Like, for example, from my tax paid income, I am making the investment in PPF. From my tax paid income, I am making the investment in the PPF, and that is what will give you me the deductions. Therefore, this is something which the law itself permit you to efficiently plan your payment of taxes. So that is the tax planning. Now, the another part, students, which is very important and students gets confused with this part, and which is about the tax management. So the second factor, students, is the tax management. Now, what is the difference between tax management and tax planning, students? Quickly, in a minute, students, can you tell me the difference between the two, tax management and tax planning, in this case? Any difference between the two, students? In this case, yes, there is a difference, students, in this case. Now, tax management, students, is those cases where, be careful, this is what they have been targeting also about in their examination. So you need to be extremely careful on this particular part as well. So far as tax management is concerned, what is that? Like, for example, students, if you remember 43B, in that payment to be made within the due date of filing of the return of income, and because of that particular payment, I will be getting a deduction which is under section 43B. So that very payment within the due date under 139(1) will provide me the deduction, and that is what this particular therefore, to make the payment on time gets me the deduction, or may I say, filing the return of income within the due date. That is also a case of a tax management. Why? If you don't file primarily the return within the due date, then there are some consequences, like in the form of interest penalty. Some of the deduction may not be available to you at first place. So those are the examples of tax management. Employer contribution to the provident fund. That employer contribution we know can be made up to the due date of filing of the return of income. As far as the employee contribution is concerned, that contribution needs to be made by when they need to make the contribution, up to the due date of the fund. Up to the due date of the fund. So therefore, to make the payment at that particular point of time within the due date which has been given to us, those are the examples of the tax management. And that is the case which is to be considered. So you need to identify. So whenever a question which will be there in respect of honoring the due dates, payment in time, filing the ROI in time, and that will help you to avoid unnecessary consequences in the form of interest, penalty or disallowances. Unfavorable consequences which is in the form of interest, penalty or disallowances. So adhering to those provisions is nothing but tax management. Now students, tax avoidance which has been there. What is the tax avoidance? Tax avoidance is something not which is illegal, but the means which has been adopted. In the case of tax avoidance, students, only one thing you have to write. And what is that you are going to write in the examination for tax avoidance? That the primary objective to do the activity is to obtain a tax benefit. So if the primary objective to do a particular activity or a particular transaction is to obtain a tax benefit, then that will be referred as a case of a tax avoidance. That will be referred as what, students? As a case of a tax avoidance. So this is a case of a tax avoidance that you should always keep in mind. I hope that all of you are clear with this one. So this is a scenario of a tax avoidance. So therefore again I'm repeating this particular point: tax planning, tax evasion, and thereafter tax avoidance. And one more thing which I've added for all of you is the case of the tax management. Now let's look upon to this particular part, students, the applicability of the GAR. Now there would be one question, students, be very careful on this one, because this students take it very lightly. When the GAR provision was being made effective, the GAR provision was being made effective with effect from 1st of or A by 1819, which means that previous year 1718, and if it is previous year 1718, in that case the 1st April 2017, on or after 1st April 2017, the GAR provision has been made effective. Now therefore, if you do any transaction, if you do, students, any transaction on or after 1st April 2017, only then you will have to see the applicability of GAR. Accordingly, students, be very careful. Supposing now there is one question which has been targeted. I made an investment in a shares on 1st April 2016, and the transfer of the shares has taken place on 1st April 2022. Now in that case, whether the GAR provision will that be applicable? That is the question that will be targeted to all of you. Whether the GAR provision will that be applicable, students? That is the question that will be targeted to all of you. So to that the answer is, students, no, it will not be applicable. Be careful. This is a combination that they may target in the examination. So applicability of GAR will require that the investment or the transaction, the first transaction, has been originated on or after 1st of April 2017. But if the very first transaction or the investment is originating before 1st April 2017, then even if the transfer of those investment has been made on or after 1st April 2017, GAR provision is not applicable. Is that point clear to all of you, students, every one of you? So this is the relevance of the cutoff date, because ICI has targeted this question in the examination earlier. So just keep that particular point in mind. Now obviously, students, as you all know, so far as the GAR is concerned, what has to be seen is that there is an arrangement and that arrangement is to be considered as an impermissible avoidance arrangement. So if an arrangement is considered as an impermissible avoidance arrangement, and be careful students, what is impermissible avoidance arrangement? In this case, impermissible avoidance arrangement means two things: the main purpose and the tainted element test. Impermissible avoidance arrangement will mean two things. What is that? The main purpose, and the second one is the tainted element test. Now the main purpose has to be to obtain what? The tax benefit. The main purpose, students, has to be what? To obtain the tax benefit. And so far as the tainted element test is concerned, in this case, it should result directly or indirectly in the misuse or the abuse of the provision of this act. So we will see one by one. Tainted element test, I'll discuss this one by one, but just keep in mind this particular part. So here what has to be seen is that as far as the applicability of the GAR provision is concerned, the arrangement should be considered as an impermissible avoidance arrangement. This is what you need to write in the examination. And that impermissible avoidance arrangement should result into a tax benefit. This impermissible avoidance arrangement should result into a tax benefit of more than rupees 3 crores. This impermissible avoidance arrangement should result into a tax benefit of more than rupees 3 crores. If that is the case, then yes, we will say that the GAR provision is applicable. The GAR provision, students, will be applicable. Now therefore, we need to decode what is impermissible avoidance arrangement. That is the only objective of this topic. So therefore, in that case, the first is the main purpose. The main purpose, students, should be to obtain the tax benefit. This is the most important point. That to do this, the entire intention was to obtain the tax benefit. And the second one is a tainted element test. Now for main purpose, students, there are two example, students, which has been given to you over here. This two examples. Now this is a ICI have targeted these examples earlier also. I just want all of you to quickly run through this example, students. Hardly it will take a minute or so. Fine, students. So in the first case, students, the merger was the situation, but although the merger would result into getting the tax benefit, but the most important point, students, that has to be considered over here is what? That it will result into the company getting access to the raw material of the other company. The access, students, will be given for the raw material of the other company. That is more important, the access of the funds, etc. So this is one of the main business purpose. That is the case. But if you say in the second example, students, what is the situation? That the two companies are already having the holding and subsidiary company relationship. And because of that reason, the access is always there. Because you are a holding and subsidiary companies, the access to these funds or to the raw material are always there. But still, if you want to do the merger, in spite of that, if you still want to do the merger, then that is, the main purpose is, students, in spite of having all the access, primarily of the fund, of the raw material, if still you want to go ahead and do the merger, then in that particular case, the main purpose, you can say, in this case, tax benefit will be considered to be a main purpose. So that is the point that you should always keep in mind in terms of this example. So this was the example which is primarily on the main purpose. Now students, so this is one of the aspects that you should always keep in mind. Now let's come to the second one, students, which is tainted element test. Now this is an important one, students. What is the second one? The tainted element test. Now what is this tainted element test, students? Or may I say secondary test? The tainted element test, students, is nothing but the secondary test. Now what is the secondary test, students? Now you will find in this case some of the items like, be careful, students, here. Now out of the secondary test, which is known as tainted element test, any one of the 4 points needs to be satisfied. Now this is sometimes can create a challenge to the students to identify which is that secondary test that is getting triggered. I will let you know, students, one of the ways to do it, and even if supposedly you are still clueless in the examination as to which secondary test you need to write in that particular question, then the best, students, to write is the point number C. If you are still clueless in the examination, main purpose, any case you will have to prove it. That look, in this question it appears that the main purpose, apart from there is no business decision, but the main purpose happens to be to obtain the tax benefit, that you will have to write. But the secondary part, to identify which of the four is getting triggered, is a challenge to the students. And I told you that if at all you still fail to identify which of the 4, then please hit on point number C. And what is point number C? Lacks commercial substance or is deemed to lack commercial substance in whole or in part. Now let's look upon to this one by one. Point number A, create a right or the obligation which are not created between the person dealing at arm's length. Creates what? A right or obligation which are not created between the person who deals at the arm's length. Now generally whenever a transaction is dealt at arm's length, then this kind of transaction is not seen at all in this case. Now one example which I can share with all of you, and this is also there in your transfer pricing chapter, if you can recall that, in which, students, if you remember that I want to transfer the goods to my AE. Now I know that if I do a direct transfer of the goods to my AE, then the transfer pricing provision would be applicable. So what I do in this case is that I introduce in between an unrelated party, and then what I do in this case, from me it goes to the unrelated party, and then from the unrelated party it goes to my AE. From me first it goes to the unrelated party, and from the unrelated party then it goes to the AE. Now you tell me, in this situation, is this sort of things is something which is created between a person who deals with the arm's length? No. This is specifically being created so as to avoid the transfer pricing exposure. And that is what this particular point needs to be looked upon. Point number A, there will not be any question in the examination. Point number A, students, there will not be any question in the examination, but I'm just giving you an example just to understand this point number A, but I feel strongly no, on point A there will not be any question in this case. So therefore in this case you will say, sir, here there is a person who is introduced in between the two AEs just to avoid the transfer pricing exposure, is just to avoid the transfer pricing provision. Now you tell me one thing, students, do you have a specific provision in the transfer pricing chapter to address this particular issue? Do we have any specific provision in the transfer pricing chapter to address this particular issue? Answer is yes, we do have. And that is a deemed international transaction. What is deemed international transaction? Wherever there is a prior arrangement that you have made with an unrelated party, as per the arrangement, as per that prior arrangement, you will supply the goods to that unrelated party, and from the unrelated party, the goods will then move to the AE. If there is a such prior arrangement which has been made, then the transaction between you and that unrelated party will be deemed to be an international transaction. The transaction between you and that unrelated party would be deemed to be an international transaction. If it is deemed to be an international transaction, then whether the transfer pricing provision will that be applicable? Answer is yes. The transfer pricing provision, students, will be applicable in this case. But therefore, there is a specific provision, students. Now, this is another set of question that ICA targets in the exam. And what is another set of question? If there is a specific provision to address this such a situation, then in those cases, whether the GAR provision, will it be applicable? If there is a SAR, there is a specific anti-avoidance rule. If there is a specific anti-avoidance rule, then in that particular case, whether the GAR, the general anti-avoidance rule, will that be made applicable? To that the answer is no. To that the answer is no. So there is another set of question where they will give you a specific case of an anti-avoidance rule, a specific case of an anti-avoidance rule which is already there in a particular chapter. And if that is the case, then the target will be made through those specific provision and not through this chapter of general anti-avoidance rule. So if there is a SAR, a specific anti-avoidance rule, then it will always prevail over the GAR. That is one of the popular question, and some questions, students, I have already given to you just to identify that, look, this is the case which is already targeted by the SAR, and since it is already targeted by the SAR, therefore the GAR will not be applicable in that case. Now, point number B, students. What is this point number B? Result directly or indirectly in the misuse or the abuse of the provision of this act. Even this particular provision, students, which is there, point number B, you will be getting an opportunity to write. So if there is a provisions to do this, to get a benefit, you are deliberately creating the situation to misuse the provision. Now, some example, students, we will see in the Q&A segment, and I will tell you how this B has to be applied in that question. Okay, so what is point number B? Through the questions of the examinations itself, we will just quickly run through the same. Results directly or indirectly in the misuse or the abuse of the provision of the act. That is point number B. Now this point number C is the game. And what is point number B? Lacks the commercial substance or is deemed to lack commercial substance. Now students, this lacks commercial substance or deemed to have lacked commercial substance. If you see over here in this particular context, have a look. Agreement which lacks the commercial substance. Agreement which lacks the commercial substance. Now, there are 4 points in this. Now, again, I'm referring in this situation. ICI in the earlier attempts, they've targeted each of these 4 points also in the commercial substance, because this is what they want to test. And I'm telling you, the question mainly would be from this commercial substance only. And in that commercial substance, what they say, substance of an arrangement, in this case, substance of an arrangement as a whole differs from an individual steps. Now students, let me give you an example very quickly. All of you, just pay attention to this one. So the example, students, in this case is, yesterday I told you about business connection. In that business connection, license office which is performing only what? Only preparatory and auxiliary service, that license office is not considered as a business connection, will not give rise to a business connection in India. So if there is a license office which is only undertaking a preparatory and auxiliary service, then that license office will not give rise to any business connection in India. Do you all agree? Isn't it? So that is one of the points that we all are aware. Now on that particular backdrop of the license office, the next particular point that will emerge is this. Be careful now, students. Supposingly a non-resident set up 10 branches. Non-resident set up 10 branches in India, and each branch is performing preparatory and auxiliary service. Each branch is performing a preparatory and auxiliary service. So individually, what we will say, that in this case they are only doing preparatory and auxiliary work, and in that case you may conclude that the non-resident will not have any business connection in India. But if you aggregate all the 10 branches together and you aggregate all their work together, then you see what, students? Then you see that in substance, primarily the transaction as a whole, if you see in substance the entire transaction, then you realize that this is not a preparatory and auxiliary services that they are doing it. This is a main business function that they are undertaking in India through those 10 branches. If you see the individual steps, we say that yes, it will not be considered. But if you aggregate the entire thing, then yes, we conclude what? That yes, it will be considered as what? It will be considered as performing a main business function. So substance as a whole, just you have to write in the examination, students, what? Substance as a whole differs from the individual form. Individual form. Is that clear? That is how it would be. And this is the example only that they are going to target. Mark my word, students. This is the same example they are going to target. And in that case, you will say that in such case, we can conclude that the transaction lacks commercial substance and therefore hits the tainted element test, and accordingly, the GAR provision can be invoked, provided the main purpose test is also satisfied. And what is the main purpose? Is to obtain the tax benefit. So if all that main purpose as well as the tainted element test, both of them are being satisfied, then we can say that yes, this is an impermissible avoidance arrangement. And if the tax benefit is more than rupees 3 crores, the tax benefit is more than rupees 3 crores, then in that situation, we will say and conclude that, what are you going to say, Shraddha? We are going to say and conclude that the GAR provision will be invoked in this case. Now this is point number 2. What is that? One is the round tripping. Round tripping, students, in this situation. What is round tripping? It's simple thing, students, in this case. So here, what I do is that, students, in this situation, one of the example, instead of I am putting the money in a company, I put the money first in Singapore. And through Singapore, the investment is made in a Indian company. So that is a round tripping, na? So instead of I putting the money where? In that company in India, or investing that in the company in India, what I am doing instead, I first do a particular investment where? In Singapore. And then through Singapore, I am making the investment in this particular company in India. So this obviously, you know the reason why people do this, to obtain the treaty benefit. And therefore, in that situation, students, this is known as round tripping. Okay, round tripping. So therefore, now you tell me whether the GAR provision, will that be invoked in this case? Answer is yes. The GAR provision, students, will be invoked in this particular case for sure. I hope that all of you are clear with this one. The next particular point, students, is that of the accommodating party. Now, what is this accommodating party in this situation? So here is a case of, students, if I give an example of accommodating party, just think of it. And this is the example which you will get it in the examination also. So supposing, students, DS has got a cost of goods of 100 and it is exporting, students, it export the goods to an entity SSINC dot, in this case SSINC dot unrelated person. So this is in Dubai and they are exporting again at 100. So therefore my profit would be nil. I'm just showing my profit as what? Nil. Now this SSINC dot in Dubai, they are selling the goods. They are selling the goods primarily. So therefore they sell the goods in this context, say at rupees 250. Okay. So there is a profit now 150. Now accordingly students, here in what happens, here the third one is SSINC dot now gives a loan to DS. How much of loan? Rupees 150. The difference, you can see the difference. Loan to DS, how much of that? Rupees 150. And finally students, point number 4, in this case, thereafter what students? Thereafter the loan has been written off. Thereafter students, the loan is written off by SSINC dot. So can I say SSINC dot is been made as an accommodating party? Can we say therefore that SSINC dot has been made as an accommodating party? And the answer is yes. So that therefore DS in India, he is having a cost of 100. He is selling the goods at rupees 100. Therefore the profit is 0. Now the same goods SS is reselling it abroad for 250. Profit is 150. This 150 is thereafter been given to DS in the form of loan, and subsequently the loan has been written off. What is this example? This is the example of accommodating party. I hope that all of you are clear with this one. So if you see a question like this, understand that it is an tainted element test in the commercial, the transaction which lacks commercial substance. And what is that? How it lacks commercial substance? Because it involves an accommodating party. And what does accommodating party do? This is what it does. You have to explain the transaction. That is it. And hence it satisfies the tainted element test. And if the main purpose is to obtain a tax benefit and the amount is more than rupees 3 crores, then in that case the GAR provision will be invoked. Accordingly, the GAR provision will be invoked. I hope that all of you are clear with this one, friends. Fine. Now this is also a critical part, friends, over here. Transaction which disguises what? The source or the ownership of funds. Just focus on these two words. The transaction, this is also an important one. The transaction which will disguise the source or the ownership of the funds. Now, how it is disguising the source or the ownership of the fund, students? Again, the example I can just give it to you quickly in this case. So here, supposingly, students, if I have to tell you that here there is a company, say X INC dot US. Now, then there is a, say, DS Limited India. Okay, now this is a subsidiary company and this is a holding company. Okay, now if they want to give the loan, so originally loan has to be given, to subsidiary. Okay, loan has to be given to subsidiary, students. Fine. Now what has happened over here? Loan has to be given to subsidiary, but I cannot give the loan, because if I give the loan, in this case, what happens in this situation? 222E will be applicable. Deemed dividend of 222E will be applicable. So accordingly, in this case, what they do in this situation, in order to avoid 222E, now see how the things are there. Supposingly there is another entity or a bank, in this case, say Y Bank in US. So what they do now, students, is this particular XINC.US holding company, they are depositing the funds with whom? With Y Bank. And now this Y Bank is now giving what? So originally they wanted to do this, but understanding the fact that there would be a 222E implication, now they deposit the fund with Y Bank, and thereafter, students, Y Bank is the one which is giving the loan to DS Limited. So now the loan has been given to DS Limited in this case. And because now that loan has been given to DS Limited, obviously you will not have 222E implication. Now this transaction, students, is trying to disguise the ownership of fund. Can we say this arrangement is Disguising what? Disguising the source or the ownership of the fund? Can we say that? It is disguising the source or the ownership of the fund, and because that it is disguising the source and the ownership of the fund, therefore what, students? Therefore, in that particular case, the GAR provision can be made applicable. Therefore, the GAR provision, students, can be made applicable. Is that point clear to all of you? Every one of you are clear with this one, students? And that exactly is the point. So therefore, students, this is what it is in this context, and this is how things has to be looked upon. I hope that all of you are clear with this one now. Every one of you. Fine, students. So this is what it would be referred as in this context. So therefore, just keep that particular point in mind. So just A, B, and C. You don't have to do the C part. Just read A, B, and C. This much is sufficient for all of you. Round tripping, I told you what happens. Instead of I directly investing in that particular India, what I'm doing, putting the money from outside India and making the investment in India. Making the investment where? In India. In this case, that's a round tripping. Accommodating party, I told you, this SSINC.Dubai is trying to accommodate me. How they are doing it, I already gave you the examples. Point number C, which is point number D, which is transaction which will disguise the source or the ownership of the fund. This is what it would be referred as. This is what it will be referred as, and that exactly how the things has to be considered. Now, students, just take across point number 4 in commercial substance. No significant effect upon the business risk or the net cash flow of any party to the arrangement apart from the tax benefit that would be obtained. That also I will make you refer one question in this. So no significant effect upon, in this case, no significant effect upon the business risk or the net cash outflow of any party to the arrangement apart from the tax benefit. I'll take you directly to the question, and then you will appreciate that this is also a case of this one. That is this, the chapter is over. So students, now we will do the question and answer quickly in this case. But before that, again I'm recapping the things, students. Recapping the things with all of you. Main purpose test, students, all of you are aware. In the tainted element test, point number A will not be asked, but what is point number A? Creates a right or obligation which are not created ordinarily by the parties who are dealing at arm's length price. They will not be targeting. Point number B, you will get a lot of opportunity to write point number B. What is that in this context, students? Point number B is result directly or indirectly in the misuse or the abuse of the provision. This is what it is. And the C part. So just A, B, and C. D also, forget it, because D and A primarily will be the one which should be the case. So result directly or indirectly in the misuse or the abuse of the provision of the fund. And what is point number C? Lacks the commercial substance. And in the lacks commercial substance, I told you to remember 3. What is that 3 point? One is substance of the arrangement. Substance what, students? I've already shared Kuldeep in my Telegram channel. Refer my Telegram channel, you will find the notes therein. Telegram channel is given, the link of the Telegram channel is in my description box, so you can refer it already. So substance of the transaction as a whole differs from, students, repeat with me, you should also speak out, huh? While you are now revising, substance of the transaction as a whole differs from its individual form. That is the one. Last point, what was the last point I told you to remember? No significant effect upon the business risk or the net cash outflow of any party. No significant effect upon the business risk or what, students, or the net cash outflow. Is that clear? And what was the second point? Second point has got round tripping, accommodating party, and only one point more, students. Transaction which disguise what? The location or the source of the fund. The location or the source or the ownership of the fund. Is that clear? Can we revise one more time quickly just to retain this? So how you are going to now in this case, how you are going to refer it? First of all, arrangement. That arrangement should be an impermissible avoided arrangement. IAA. Now how you have got IAA? IAA, impermissible avoided arrangement, means that the primary objective should be to obtain the tax benefit. That is the primary objective. And what is the secondary? Is a tainted element test. In tainted element test, I told you to have three things remembered. What is that? The ordinarily such way the parties will not be dealing at who are dealing at arm's length price. Point number B, results into abuse, misuse of the provision of the act. And point number C, students, is what? Is about the transaction which lacks commercial substance. In the transaction which lacks commercial substance, substance as a whole differs from its individual form. Last point, students, what was the last point? No significant effect upon the business risk or the net cash outflow. And second one which was there, involves what? Round tripping, accommodating party. And the third one, students, transaction which disguises the source or the ownership or the control of the funds. Is that point clear to all of you, students? Now with that, now students, now we are up to the question. Now question has been given to all of you, students. Quickly we'll refer it and try to wrap it up. Now if you see, students, over here, I told you already, you have to identify SAR provisions. Is there any specific provision under the income tax law which is already targeting such avoidance measure made, such tax avoidance measure by the SSC? Is there any specific provision? That is one category of question. So for that we need to have a knowledge of other chapters, and obviously, like, you will find this particular question, students. All of you just have a look to this question. Company X borrowed money from company Y, and so company X has borrowed money from whom? From company Y, and used it to buy shares in 300% subsidiary companies of X. Okay, so they have used to buy in 300% subsidiary companies of X. Through the fair market value, though the fair market value of per share is rupees 100, X paid rupees 600. Remember in this case now, the FMB was 100, but I am paying 600. Remember, students, there is section 56 in IFOS. In 56(2)(7)(b), there is this provision, and what is that provision says? That if an Indian company is receiving the, is taking the or if the Indian company is issuing what? Its share capital to a resident which is of an amount in excess of the face value, then the difference between the issue price and the fair market value, will be considered as deemed income in the hands of the company itself. So whether there is a specific provision which targets this tax avoidance route, is there a specific provision which targets this tax avoidance route? And the answer is yes. So what is the difference, students, over here? Difference is 500. So 500, students, we will say is already targeted under section 56(2)(7)(b). And because it is already targeted, if SAR is there, GAR will not be invoked. In this case, if SAR is there, then the GAR will not be invoked. That is what you have to write in this case. One more question is there of this nature. In fact, I will just tell you about this first, and then we will do the other one. Let's deal with, we have got one more question on SAR where the GAR will not be. See this one, students. Question number 7. Mrs. Highway Drive Limited incorporates a wholly owned subsidiary, Mrs. Highway Roads Limited, in India during the financial year 2019-2020. Its main business is to develop infrastructure facility and is eligible for deduction under ATIA. Accordingly, the company has claimed a deduction under ATIA for 24-25. Fine. Highway Roads Limited derives income other than income from developing infrastructure facilities and discloses such income as income from developing infrastructure facility and thus enjoying tax benefit of ATIA. So it means that this income is not an income from infrastructure, but you are disclosing that as an income from infrastructure. This income is not an income from infrastructure, but you are disclosing that this as an income from infrastructure. Is it an underreporting or misreporting? Can I say this to be a case of a misreporting, students? Answer is yes. And if it is a case of a misreporting, what we are going to say, students? If it is a case of a misreporting, then in that situation we are going to say it is a case of a tax evasion. And if it is a tax evasion, GAR is not applicable. GAR is only for tax avoidance, not for tax evasion. In fact, a tax evasion, so therefore the provision will be invoked. So GAR is only for tax avoidance cases, not for tax evasion. I hope that all of you are clear with this one. Point number 2. Highway Roads Limited purchases the supply for the development of infrastructure facility from Messrs. Highway Drive Limited at a price lower than the fair price, thus transferring the income of Messrs. Highway Drive Limited to Messrs. Highway Roads Limited and enjoying the benefit of what? ATIA. So what has happened is that the subsidiary company and holding company relationship is there. So they are the entity with close connection. They are the two entities with close connection. Now, one entity in this two is transferring to this ATIA unit at a price which is getting more than an ordinary profit, at a price which will generate more than ordinary profit to whom? To the ATIA unit. Now, students, if you have read this ATIA provision, there is already a specific provision which targets this kind of a scenario. That if there is a transaction between entity having a close connection which results into a more than the ordinary profit, then such transaction will be determined on the basis of fair market value. There is already a provision which says that such transaction will be determined on the basis of the fair market value. And therefore, if it has to be determined on the basis of fair market value, that is it. There is a specific provision which is already there to address this particular situation, and if there is a specific provision which is already there to address this particular provision, then again we can say SAR will override the GAR provision, and that is exactly what we are going to say in this case. Come to the students, other question, students, over here. In this context, now Messrs. Global Architect Inc. is a company incorporated in country F1. It is engaged in the business of providing architectural design services all over the world, students. It receives an offer from Lovely Resorts Private Limited, an Indian company, for design and development of resorts all over India. In India, F1 tax treaty provides that architectural services are technical service and payment for the same to a company may be taxed in India. However, if such professional services are provided by a firm or an individual, then the payment of such services are taxable only if the firm has a fixed base in India or a stay or partner employees in India exceed rupees 180 days. Messrs. Global Inc. forms a partnership firm with a third party having only a nominal share in F1. So the third party is having only a nominal share in F1. The firms enter into an agreement to carry out, students, in this case, the firm will be carrying out, students, the firm enters into an agreement to carry out the services in India. The company seconded its trained manpower to the firm. Thus, the partnership firm claimed the treaty benefit and no tax was paid in India. Can such arrangement be examined under the GAR? And the answer is yes. Now, forming a firm, students, in this context, tell me the primary purpose, students, primary purpose is it primary purpose to form the partnership firm? Is it to obtain the tax benefit? Answer is yes. We can say that. Point number 2, tainted element test. I can invoke two tainted element tests over here. Misuse or abuse of the provision. There is a provision which you are trying to abuse. By forming this firm, you are trying to misuse or abuse the treaty provision. That is the second point that we can say. And also, the forming a partnership firm lacks a commercial substance. The forming of what, students, is what? Is to lack a commercial substance, students. So there is absolutely no such thing which has been there in this context. as far as the formation of partnership firm is concerned, and therefore we will conclude that yes, the GAR provision will be invoked. The GAR provision, students, will be invoked in this case. Is that point clear to all of you? So this is what you are going to say. So here we can use two tainted element test, which are those misuse or the abuse of the provision, and the transaction will lack the commercial substance. Coming to point number 4, students, over here. In this case, under the provision of tax treaty between India and country V, if a resident of country V makes any capital gains by selling the shares in any Indian company, such capital gains will be taxed only in country V and it will be exempt from tax in India. Means that Mauritius won. But yesterday itself I told you, what was that? Whether the GAR provision will that override the treaty provision? Can a GAR, can it override the treaty? And the answer is yes, it can override the treaty. But for that, the GAR test of main purpose and the secondary purpose, that also should be satisfied, isn't it? If it is satisfied, then the treaty cannot come in the way of GAR. Then the treaty cannot come in the way of GAR, students. Is that clear to all of you? Let's read. However, as an exception, it also provided that such exemption is not available. Such exemption is not available if the transferor holds more than 10% interest in the equity capital of the Indian company. So in this case, if the transferor in this case is holding that 10% equity capital in that Indian company, more than 10%, then the treaty benefit is not available. VFX Limited, resident in country V, floated two wholly owned subsidiaries in country V. On 1st of April 2023, both the subsidiary bought 9% shareholding in XYZ Company Limited, an Indian company. These subsidiaries do not have any other income. So see, if you see, it is actually 18. But now through those two companies, they have made 9 and 9. Why they are making 9 and 9? Because if it is 10% holding in that Indian company and you transfer that Indian company share, then the treaty benefit is not available. So therefore you made 9 and 9 by making two companies. On 31st December 2023, both of them sold the investment in XYZ Company Limited. Each of the subsidiary claim exemption from the Indian capital gain tax amounting to 2.5 crores from such sale, as each of them are holding 10% less than 10% equity shares. Can GAR be invoked in such case to deny the treaty benefit? And the answer is yes. Now be careful, but however hear it. Students, tell me one thing. 2.5 crores is the capital gains. One more argument. Students, one more argument is this, that they will say that because the treaty benefit is what? Students, the treaty benefit is less than, the tax benefit is less than 3 crores. Therefore, the GAR provision is not applicable. This is one more argument that they will place. What you have to do in this case, students, you have to see the entire arrangement as a whole and then see whether the tax benefit has gone more than 3 crores. So now you tell me, main purpose to incorporate those two companies. What is the main purpose? To obtain the tax benefit. That is a treaty benefit. So obtain a tax benefit. Tainted element test. Tainted element test, can we say again misuse or abuse of the provision of the act? By creating two subsidiaries at 9% shareholding, it is to misuse or the abuse of provision of the act? Again, the answer is yes. So can we say even in that situation, and those two companies by themselves lacks any commercial substance? Those two companies are only formed for the purpose of investment. They by themselves lack any commercial substance, and therefore we can say that both the main test, the purpose test and the tainted element test is satisfied, and hence the arrangement is an impermissible avoidance arrangement. The arrangement is an impermissible avoidance arrangement, and if the arrangement is an impermissible avoidance arrangement, then whether the GAR provision can that be invoked? To that the answer is yes. The GAR provision, students, can definitely will be invoked in this particular regard. Now you tell me whether the tax benefit, is it more than 3 crores? Yes, as a whole you have to see. So 5 crores. So the tax benefit is also more than 3 crores. But what will be your answer if the capital gains tax on such sale, instead of 2.5, it is 1.2 crores each? So 1.2 and 1.2, 2.4. So what we are going to say in that situation, students? It does not exceed. It does not exceed, students. It does not exceed this particular part of 3 crores, and hence what, students? Hence the tainted element test, we can say that, sorry, and hence the threshold of 3 crores is not crossed. Hence the GAR provision cannot be invoked. The GAR provision cannot be invoked. Now over here, question number 5, students, if you see, now this is an important question, students. This is, I think, targeted 2 times by the ICM. This is an important question which has been there. Just this is the last question, students. We are done with it. And then I'll move on to alternate tax regime. Examine whether the general anti-avoidance rule can be invoked to deny the treaty benefit in the following cases, assuming that all the other conditions prescribed for application of GAR are being satisfied. X Private Limited, an Indian company, and Y Private Limited, 100% subsidiary of Yan Limited, located in country A, formed a joint venture company XY Private Limited in India. So, see what has happened. So, X Private Limited and Y Private Limited. Now, Y Private Limited is located where? X Private Limited is located in India. Where Y is located? It is located in country A. Now both X and Y have made XY Private Limited an Indian company. As per the joint venture agreement, 51% of this XY is held by X and 49% is held by Y. There is no other business activity in Y Private Limited. Now Y Private Limited is designated as permitted transferee of Yan Limited. Now Y Private Limited is, so Y is designated as permanent transferee of Yan Limited. Now who is Yan Limited in this case? So first of all, please understand what is this permitted transferee. Permitted transferee means though the shares of XY Private Limited are held by Y Private Limited, all the rights of voting, management, right to sell, etc. are vested with Yan Limited. Be careful here in this case, students. So, Y Private Limited is a subsidiary of Yan. Now, Y is holding in XY. How much, students? Y is holding in XY? 49%. So, Y is holding 49% in XY. But who is the permitted transferee? PT. Permitted transferee of Y is Yan Limited. So what Yan is doing is that in the name of Y they are holding XY. The voting power, right to sell is with whom? With Yan Limited. In this case, on 19th of March, the shares held by Y Private Limited in XY are sold to P, which is a group company of X, as per the tax treaty between India and country A. There is no tax for capital gains either in source country or in country A. So no tax on the capital gains. Which treaty between whom? Between India and country A. Between India and country A. In this context. So therefore, students, this particular case, what they have done, now we can see very clearly. So Yan is holding, students. Now please tell me, can we therefore say Yan is holding through Y only to obtain, because Y is, where Y is located, students? Y is located in country A. So Yan Limited, what they have done, they have first put up a company in country A. The name of the company is Y. And now through Y, they are investing through a joint venture with X in XY Limited. So Yan Limited first has put up a company Y in country A. Now that company Y along with company X, they are together holding in XY Limited, where Y has got 49, X has got 51. Now what Yan now is doing? Yan is now transferring the 49% shares held by Y in XY. So Yan is now transferring 49% of shares held by Y in XY. Now, in the name is that of Y, who is the owner of the shares, but the right of transfer is with whom? Yan. Why they are doing this? So as to obtain the treaty benefit of country A and India. And now again the same thing. What is the same thing? Y lacks commercial substance, and forming Y in country A is to misuse, abuse the treaty provision between India and country A. Now, one more point you can elaborate. Forming Y in this case, it has got no, see, if I would have held directly, students, tell me one thing, Yan Limited would have held directly, primarily, or Y is investing in XY, there is absolutely no business risk, because ultimately the control is with me. No business risk, no cash flow. The net cash flow remains the same, because what I did, instead of Yan investing directly in India, what they have done, they have invested first in Y and let Y invest in XY. So there is no business risk involved. There is absolutely no net cash flow change that has happened in this case. So neither there is a business risk involved, nor there is any alteration of cash flow in this sort of transaction. And therefore, can we therefore say that it is lacking a commercial substance? Yes. Can we therefore say it is about misusing or the abuse of the treaty between India and country A? Yes. Therefore, is the secondary test or the tainted element test is satisfied? Yes. What is the main purpose? Main purpose is to obtain tax benefit. And if the tax benefit is more than 3 crores, then in that case, the GAR provision, students, will be applicable in this case. So see over here, students, the arrangement of routing investment through country A would result in a tax benefit. There is no business purpose in incorporating a company Y Private Limited in country A. It can be said that the main purpose of the arrangement is to obtain a tax benefit. Now see over here what they have written. On the question whether the arrangement has any tainted element, it is evident that there is no commercial substance in incorporating Y Private Limited, as it does not have any effect on the business risk of Yan Limited or cash flow of Yan Limited. I told you both the things, right? What is that? Instead of Yan directly investing in XY, Yan is putting the money in in Y, and through Y it is putting the investing in XY. Is the business risk any getting altered? Answer is no. So therefore, does it lack commercial substance? Answer is yes. Additionally, the fact that all the rights of shareholder of Y Private Limited are exercised by Yan Limited instead of Y, it indicates that Y Limited lacks what? Commercial substance. And therefore, students, what is the situation? As a twin condition of main purpose being the tax benefit and the existence of the tainted element test are satisfied, GAR may be invoked in this particular case. And that exactly is the point, students. So this, we are done with this one. Now, students, just a small point, which is this question. A Limited, an Indian company, incorporates a wholly owned subsidiary company B in country B. So they are incorporating a wholly owned subsidiary company B in country B in a low tax jurisdiction with equity share capital of 1 crore. So A is putting up a company. So therefore, A in India, they are first floating a company in a low tax jurisdiction. Company B, they are floating out. Now in this case, equity share capital 1 crore. Now, out of the equity share capital, company B gives the loan to C Limited, an Indian company, at a rate of 5%. So therefore, in this case, what they're doing, they are giving this particular thing at 5% to C, 5% loan. 5% loan, students. Now you, in fact, tell me in this case, can we say, students, it's a case of a round tripping? Now, instead of A giving the loan, let A should have given the loan to C. But no, they first float B in low tax jurisdiction and then give the loan to C. So this is known as round tripping. You could have directly given the loan in this context, but instead of directly giving the loan, you first float a company. Then through that company you are giving a loan. What it is? Round tripping. Now why do you have done this? Because obviously if C would have given the interest to A, then A would have reported that profit in its books. And because A is in India, the profit would have been taxed at a higher rate. Instead of doing this, what they are doing, A is giving the loan to A is floating a company in low tax jurisdiction, and now the interest will go to him to B. The interest funds will go to him to B, and because now the interest will go to B, the interest income will be reported at BZ. And since the interest income will be reported at BZ, therefore students, please tell me in this situation whether it will be subject to any tax in this case, at a very lower amount of tax. So the main purpose is to obtain a tax benefit. Tainted element test, the transaction of floating a company, the arrangement of floating a company in B lacks commercial substance. Why it lacks commercial substance? Because it involves round tripping. Because it involves round tripping. And therefore even the tainted element test is satisfied. And hence the GAR provision can be invoked. Is that point clear to all of you? And that is what students it's all about. You are done with your chapter on GAR, and this is what it is. So we are through with this one, students. Now with that, now we move to our next topic, which is on the alternate tax regime. All the notes, students, I have put up across in my Telegram channel, students, as well. The notes, students, are already there in the Telegram channel. Students, all of you will take those notes. Also keep the book ready, any of your textbook that you are referring to on the alternate tax regime. Now students, herein again an important topic, question number 1 is what is getting targeted in this case. You all are aware of this one. Question number 1, students, is what is getting targeted in this case. All of you are aware of this. Now we will be discussing the MAT as well in this context, but let's first look upon to this one, domestic company. Students, normal plan. Now in this case there is an alternate tax regime. Domestic company, now there is an alternate tax regime which has been there. Now alternate tax regime, students, you have to be very careful on this particular part. We will discuss this alternate tax regime in this context separately, but let's first do the normal plan. Let's first, students, do the normal plan in this case. So let's focus on the normal plan. Normal plan, students, what you do, the regular, in this case, regular provisions and the MAT provision. In the normal plan itself, MAT is applicable. MAT has to be compared with the liability under the regular provision, isn't it? What do you do in the regular provision, students? In the regular provision, students, in this case, you compute the total income, and on that total income, you multiply with the rate of tax. I'm talking about the company. Now rate of tax in the case of regular provision would be if there is any special income. If there is any special income, then the special income would be taxed at a special rate. If there is any special income, then the special income will be taxed at a special rate. And on the balanced total income, students, that you can see, on the balanced total income, students, that you can see, you have to ask this very important question. And what is the question? Whether the turnover for the previous year 2021, is it up to rupees 400 crore? Whether the turnover, students, for previous year, whether the turnover up for previous year 2021 is up to rupees 400 crores. That is a question, students, that you have to target. Be careful. You have got your previous year 22-23. Now for you people, you have to go last to last year. Last to last year. So therefore last to last year would be previous year 2021. And now you will say, sir, yes, the turnover is up to 400 crores. If the turnover is up to 400 crore, then on that balanced total income, what is the rate of tax that you will apply? On the balanced total income, the rate of tax will be applicable at the rate of 25%. But if the turnover, students, is more than 400 crores, then on the balanced total income, I'm repeating this point of balanced total income, because please understand, the special income would always be subject to a special rate of tax. The special income will always be subject to a special rate of tax. So on the balanced total income, the rate will be at 30%. The rate, students, will be at 30%. So this I'm talking as far as the domestic companies are concerned. So therefore, for a domestic company, if you see the normal plan, regular provision, or there is a MAT. This is for normal, alternate tax regime for a domestic company does not have any MAT. So normal provision only has got the normal regular provision which we have seen just now, or the MAT. So far as MAT is concerned, students, so far as the MAT is concerned, what is involved? Are you supposed to calculate a total income or book profit? What is that you are supposed to compute? Book profit. Now book profit has to be computed under 115 JB, and on that book profit, what is the rate of MAT applicable over here? The rate of MAT applicable is 15%. The rate will remain constant irrespective whether there is any special income included in the book profit. It will not change the rate of MAT in that case. It will not change the rate of MAT, students, in that case. Now students, if you see, I have done a surcharge over here in this context. What about the surcharge, students? That is applicable. Now surcharge, students, you know, for a domestic company is 7% or 12%. That is the rate of surcharge. Now when you talk about under the normal provision, that we have to see the total income. If the total income exceed rupees 1 crore, then 7% is the rate of surcharge. If the total income exceed rupees 10 crore, 12% is the rate of surcharge. Whereas if you're talking about MAT, which is at 15%, the same rate of surcharge is given, 7% or 12%. But we have to see over here what? Not the total income, but the book profit. What we have to see, students, over here, not the total income, but the book profit. Is that point clear to all of you? And that exactly what we will see in this context, and that exactly is the point. So it's a book profit, students, that has to be seen over here in this regard. Okay, so that is the only difference which is to be considered. So this is the tax structure under the normal plan. And now I come to the alternate tax regime, students. Now I'm coming to the alternate tax regime. Now so far as the alternate tax regime is concerned, if you see it very carefully, in the alternate tax regime, total income is computed as per this provision. Which provision? 115BAB for a company if I'm talking about it, or 115BAA. So you will compute the total income as per 115BAB or 115BAA. And whatever the income is computed, on that you will apply the rate of tax. Now be careful, rate of tax is important over here. What is the rate of tax, students, in this case? First is, if in the total income which you have computed, if there is any special income, students, then in that total income that you've computed, if there is any special income like long-term capital gains of 112A, 112, short-term capital gains of 111A. So if there is any special income, then that special income will be taxed at special rate. And so far as the balanced total income is concerned, now you have to be careful. On the balanced total income, whether the provision of section 115BAB is that applicable. If the answer is no, let me discuss first the no. Then the alternate tax regime would be under 115BAA. We are talking right now only about alternate tax regime. No? So if 115BAB is not applicable, then the alternate tax regime would be under section 115BAA. And students, that rate would be the rate of 22%. That rate, students, would be the rate of 22%. Obviously, surcharge and HEC will follow. That is a flat surcharge and flat HEC that will follow. If the answer is yes, students, if the answer is yes, in that situation means 115BAB is applicable in this case. Then the next question to be targeted, students. What is the next question that you have to target in this case? Indeed. So the next question, students, would be for 115BAB, there are 3 rates. Students, there are 3 rates which are being there. Are you aware of this 3 rates, students? 15%, 22% and 30%. 3 rates are there. Now, which case 15%, which case 22% and which case 30%. Now 15%, students, that you can see over here is from the income which is derived or incidental to the eligible manufacturing business. Income which is derived or incidental to the eligible manufacturing business, that is 15%. 22% is for any other income. 22% is for any other income. Okay, what is any other income? Neither derived nor incidental. Neither derived nor incidental, students. And the last one, students, is 30%. This 30%, students, is for transaction with the person having close connection and generating more than ordinary profit. Transaction with person having close connection and generating what? More than ordinary profit. On that, there would be a 30% rate that will be involved under 115BAB. 30% rate that will be involved. Now, please pay attention to the 15% case. Neither derived nor incidental, students. Now, one point which is there, 15% is a rate. Students, over here, one point which you have to write, which I'll just put across. No deduction of any expenditure. No deduction of any expenditure. Now tell me one thing, students. All of you, one question. Domestic company has borrowed, students, the domestic company has borrowed for the purpose of investment. For the purpose of the investment in which domestic company? The domestic company which is opting for 115BAB. The domestic company which is opting for 115BAB. Now this domestic company has borrowed for the purpose of investing in the shares of an Indian company. To invest in what? In the shares of an Indian company. Okay. Now on that borrowing there will be an interest expenditure. On that borrowing, students, will there be any interest expenditure? And the answer is yes. Okay. From the investment they are getting dividend income. Now we remember, students, interest expenditure on the loan borrowed for the purpose of investment in the shares. That interest expenditure will be eligible for what? Will be eligible for a deduction. And the maximum deduction is 1/3. That is what it would be. Now you tell me whether the interest expenditure will be allowed as deduction. Now first of all, this income is a dividend income. Dividend income for this domestic company, can I say it is a other income? Can I say this as a other income? Neither it is derived nor it is incidental. Neither it is derived nor it is incidental. So it is neither derived nor incidental, and therefore can we therefore say in this particular context that this particular interest income, students, will be considered as a other income. And if that is the case, what is the rate of tax? 22%. What is the rate of tax, students, in this case? It will be 22%. Do you all agree to this one? Yes. Fine. Now, will you get deduction of this interest expenditure against that dividend income, subject to the maximum 1/3? Will you get deduction of this interest expenditure against that dividend income, subject to the maximum 1/3? Answer is no. Why? Because 115 BAB specifically prohibits any deduction of an expenditure which is incurred to earn what? The other income. So therefore, other income will be taxed straight at the rate of 22% without any deduction of any expenditure. This is one of the important example. Another example of the other income would be simple example, like the company has given on rent a house property. And if the company has given on rent a house property, in that situation, the rental income will be chargeable under the head house property. Now there is a standard deduction available in the head house property. So whether the standard deduction will it be available over here? Answer is no. Standard deduction, students, will not be available over here, and that is what this particular point has to be considered in this regard. Is that point clear to all of you students now? Every one of you? So this is how the things has to be looked upon in this case. So no deduction whatsoever. Now apart from this, now but at the same time, if you are solving a question of 115 BAA, students, if you are solving the question of 115 BAA, there are no such for the what happens for the balance total income, which we are discussing it right now. There is no such level of comparison as far as 115 BAA is concerned. There is no such level of comparison as far as 115 BAA is concerned, which means that whatever is the balance total income, as far as 115 BAA is concerned, it will be taxed only at a one rate, and which is 22%. It will be taxed only at one rate, which is 22%. That is it. So no 15%, no 30% in this regard. It will be taxed only at one rate, which is 22%. I hope that all of you are clear with this one. Now you tell me then, in that situation, when the same question that they are giving it to you in the examination, where the domestic company has opted for 115 BAA and has made some investment income from which it is getting a dividend. Now to do this investment, it has taken a loan. From that loan, they are incurring an interest expenditure. So whether that interest expenditure, will that be allowed as deduction from that dividend income? Will that be allowed as deduction from the dividend income? Answer is yes, subject to that 1/3 provision of section 57. I hope that all of you are clear with this one. Every one of you. So there is no prohibition of deduction of that interest expenditure when you have to compute 115 BAA. But when you are in 115 BAB, the fact that this dividend income is an other income, and on other income there is no question of deduction of any expenditure, hence the interest expenditure will not be allowed as deduction. This is therefore what you need to be very careful about it. Now please understand one thing. For that 15%, two income has been carved out. Which are those two income? Income which is derived, or the income which is incidental to the manufacturing business, to the eligible manufacturing business. Income which is derived, or income which is incidental to the eligible manufacturing business. Now when you talk about income which is incidental to the eligible manufacturing business, be careful, huh? Incidental. Tell me one thing. If there is a short-term capital gain on transfer of a depreciable asset, if there is a short-term capital gains on the transfer of a depreciable asset, now you tell me in this case, is the transfer of depreciable asset, students? Can we say depreciable asset is nothing but a business asset? And if the depreciable asset is nothing but a business asset, on its transfer, students, on its transfer, it will be considered as what? Incidental business income. A depreciable asset, if it is transferred, what it is? It is a business asset. So it is an incidental business income. It is an incidental business income, though it is chargeable under the head STCG. But here we are not concerned with this STCG and all. we are only talking about, is it an incidental business income? Which head it is taxable? We don't care. But is it an incidental business income? Yes. If it is an incidental business income, then this STCG on transfer of a depreciable asset, can we say it will be charged at the rate of 15%? Can we say it will be charged at the rate of 15%? And the answer is yes. I hope that all of you are clear with this one now. Now the one last point, which is the only point to be discussed, because this is where students get confused in the examination. Students, remember in the profit link deduction of 80IA, 80IB, 10AA, etc. only the profit which is derived from the eligible business, only the profit which is derived from the eligible business is what is allowed to you as a deduction. Only the profit which is derived from the eligible business is what is allowed to you as a deduction. That is it. So the profit which is derived from the eligible business, students, is what is allowed to you as a deduction. And if that is the case, students, in the case of profit link deduction, if there is any incidental business income, then whether the incidental business income, will they qualify for a profit link deduction of 80IA, 80IB, 10AA? Answer is no. But an incidental business income, are they eligible for 115BAB 15% concessional rate? Answer is yes. Incidental business income is eligible for 15% concessional rate, but they are not eligible for the profit link deduction. When you do for 80IA, 80IB, 10AA, then these incidental business are not considered as a part of the qualifying amount for the purpose of profit link deduction. Now that's the reason why I gave you one case study, students, in your chart, which you should always appreciate. And what is that? Deposit to obtain the business from the government. Can you see this? Deposit to obtain the business from the government. Now obviously this deposit was been made in the bank so that the bank can furnish the bank guarantee. Now through this deposit there is an interest income. Through this deposit there is an interest income. Now this has resulted into incidental business income. This has resulted into an incidental business income, students. This has resulted into what? Into an incidental business income. Now, accordingly, students, if you see very carefully, in this context, now contract has been awarded and manufacturing has begun. Students, contract has awarded and the manufacturing has begun. And thereafter, students, from manufacturing, thereafter there is a sales and export. From manufacturing there is a sales and export. And in between there is a power subsidy or freight subsidy. Power subsidy or freight subsidy that has been received by the SSC. So from manufacturing till the sale, we say this as, from the manufacturing till the point of sale, we say this as what? As a profit which is derived. From the manufacturing till the point of sale, students, what we say this to be? This to be a profit which has been derived. And accordingly, students, now after the sale, students, after the sale there is an export incentives. After the sale, students, there is an export incentive. This export incentive will result into an incidental business income. This export incentive will result into what? Into an incidental business income. I hope that all of you are clear with this one. And now then you have to talk about, students, what is the tax regime in this scenario? What is the tax regime, students, in this case? So can you see this one? The tax rate is 15%, 10% or 4%, as the case may be in this situation, on the entire incidental business income and the income which is derived. On the entire business income, you will have a 15% base rate plus 10% and 4%. 10% in any case is a flat surcharge. So that's exactly what it is. Now see the capital gains part, students. Now for capital gains, I'm just giving a case study over here. Just remember this particular part. Now the capital gains, students, if you see a case study on capital gains, if it is an LTCG of 112A, then it's a special rate is applicable. Yes, special rate is applicable. How much is that? 10%, and 10% over and above 1 lakh of LTCG. 10% over and above 1 lakh of LTCG. For the other case of capital gains, it will be 20%. For the other case of capital gains, it will be 20%. Or there would be an STCG, students, in this situation. or there will be what? An STCG students in this case. Now an STCG students which has been there over here, if the STCG is that of 111A, short-term capital gain on transfer of security transferred in a recognized stock exchange on which STT has been paid, how much is the rate? Rate would be 15%. And what about the other STCG? There is no separate rate. For the other STCG students, is there any separate rate? Answer is no. Now please be careful for the other STCG. In this case, so STCG on depreciable asset, we just discussed this particular point. Is the STCG on depreciable asset what it is? It is incidental business income. Incidental business income, though specifically chargeable under the head capital gains. Is it an incidental business income? Yes, it is an incidental business income, though it is specifically charged under the head capital gains. 115BAB will be applicable, and what is the rate? 15% plus 10% plus 4%. Short-term capital gain on non-depreciable asset, what it is? You see for yourself over here, students. It is an other income. Other income other than depreciable asset. Any other short-term capital gains is an other income, and in other income I told you that there should not be any deduction of any expenditure. I told you, na? In the case of other income, there should not be any deduction of any expenditure. But students, there is one exception to that rule. And what is the exception? If this short-term capital gains on a non-depreciable asset, then you are allowed the deduction of cost of acquisition. You are allowed the deduction of cost of acquisition. This is the only exception to that particular rule. Is that point clear to all of you? That's the only exception to that particular rule. Now the net short-term capital gain, students, shall be taxable at the rate of, what is the rate? 22%, which is the base rate for other income under 115BAB, which is the base rate for other income under 115BAB. So 22% plus 10% plus 4%. Now before I do the practicals with all of you students, in this case, two big good practical questions are there. Couple of points that I just wanted to discuss with all of you. Important points. As such, many of you know that when you compute the total income under 115BAB or when you compute the total income under section 115BAA, you have to forego many of the deductions at first place. You have to forego many of the deductions, students, at first place. Do you all agree to this one? You will all have to forego many of the deductions at first place. Big deductions, every one of you are aware of it. Like for example, so by the way, students, be careful of 115BAB. 115BAB is for just a confirmation so that we are all on the same page. Otherwise, it should not happen. So this is for eligible manufacturing company or the SSE which is engaged in the power sector. SSE in the power sector undertaking. Now this eligible manufacturing company, students, be careful. It does not include what? There are some cases which it does not include, students. And what is that? Development of, in this case, the most important one, students, is the development of software. Development of software. Computer software, students, in this case. Then you are mining, conversion of marble blocks, and then there are, students, other cases of bottling, printing of books, and cinema films. Cinema films. So these are the case. Please understand, it is only for 115BAB that this exception has been created. Only for 115BAB that this exceptions are being created, students. Are you clear with this one? Only for 115BAB I'm talking about it, students, that this exception is created. Otherwise, they are manufacturing only. So if there is no 115BAB angle, students, if there is no 115BAB angle, then in that situation, students, you will consider them as manufacturing only. It is only limited for one particular purpose. And what is that? For 115BAB, these manufacturing activity are not considered as eligible. This manufacturing activity are not considered as what? Eligible. I hope that all of you are clear with this one. Every one of you. So this is how the things has to be looked upon in this particular case. So therefore, students, herein in this context, this is one thing which you should always keep in mind. So now, students, apart from that, so now, students, as you all know that there are some big sections which are not been allowed. Allowed, students, what? Big sections are not been allowed, students, in this case, the deductions. Any idea about which are those sections, students, to whom they are not allowing to them? Like additional depreciation is out from the race. Apart from that, students, now that's a very quick thing. Every one of you are aware of this one. So the big section which are out, students, is like additional depreciation. Thereafter, students, you have this particular case of 33AB, the tea, coffee, rubber development allowance. You also have this particular case of what? The 35AD, the specified business. Okay, students, by the way, what is the date of manufacturing? This company which should be incorporated which date? On or after? Be careful. On or after 1st of October 2019. Just keep that particular point in mind. So therefore, in this case, 35AD is also not available. Then all the profit link deduction, students, all the profit link deduction is gone. All the profit link deduction, students, they are gone. Now coming to some peculiar cases, students, this is a case where you have to be very careful about it, which is about this section 35. Now section 35 has got two components. Which are those two components? One is that of the donation part, donation or contribution to scientific research. Now donation and contribution to scientific research, in this case, not available when you are in that alternate tax regime. But on the other side, which is about the revenue expenditure and the eligible capital expenditure on scientific research. Now the deduction, students, as you may be aware, for these two cases are covered under section 35(1)(1) and 35(1)(4). 35(1)(1) is for revenue expenditure, 35(1)(4) is for the capital expenditure. So the deduction under 35(1)(1) and 35(1)(4) for these two, are they allowed, students? And the answer is yes. So revenue expenditure and eligible capital expenditure. So the deduction in respect of these two, students, are they allowed to that? To that the answer is yes, it is allowed, even if the SSC has opted for 115BAA or 115BAB. Apart from that, nothing else is given. Now, students, be very careful in this situation. Now, students, there are one more category. There are three sections, students, if you can remember that. One is 35CCA, 35CCC, and 35CCD. Now this is for skill development project. Now these are all capex. These are all, students, capital expenditure. These are all capital expenditure. Now 35CCD is for skill development. 35CCC, in this case, students, 35CCC in this case is the agriculture extension. Okay, and 35CCA is for rural development. 35CCA is for rural development. Now be careful, as far as 115BBA or 115BAB is concerned, these two are not available. Agricultural and skill development are not available, but rural development, students, is available. That is a point that you should always bear it in mind. I hope that all of you are clear with this one. And the next one, students, is about the chapter 6A deduction. So far as chapter 6A deductions are concerned, two are allowed. Which are those two? Indeed, 80JJAA and another is 80M. These two are allowed. And 80M, all you know, is available for a domestic company. Now domestic company is getting deduction under 80M in respect of the dividend that it has received. In respect of what? The dividend that it has received. So in respect of the dividend that it has received, students, in respect of the dividend that it has received, they are getting the deduction, students. I hope that all of you are clear with this one. In respect of dividend that they receive, they will be getting a deduction. But the deduction is maximum up to what? The deduction, students, is maximum up to indeed. Up to what? The dividend that it has paid a month before the due date of the filing of the return of income. A month before the due date of filing of the return of income, which is, as you all are aware, in this case, students. Yes, Piyush. So therefore, as you all are aware, students, in this case, what it is? 31st October is the due date of filing of the return of income. So therefore, a month before, students, would be what? 30th of September. I hope that all of you are now clear with this one. Every one of you are clear. Can we then proceed, students, further in this context? Fine. Shall we do this question now? This is what you need to know. And if you all are through, we are now ready with this question, students. Now, students, this question is not only a question, students, it is also an emotion, isn't it? This question is also an emotion in a way. So in that case, students, you will find the presentation also properly, how you have to present your question number 1. You just, because this is a last opportunity, how you present your question number 1 is also very critical. Very quickly, students, we will be discussing this particular part. In this case, let's do the first one. So Mrs. Diamond Limited, an Indian company. Now whenever you read the question, I told you that this is how you have to read the question. Mrs. Question number 1, this would be Mrs. Diamond Industries Limited, an Indian company, is engaged in assembling and manufacturing of automobiles and auto components in Indore, Madhya Pradesh. The net profit after debit and credit of the following amount to its statement of profit and loss account is 9 crore 50 lakhs. Now what I told you, students, I have told you already, remember that directly. Now this is additional information. See the structure. All these are one. This is all you should read. 1 to 9. They are all adjustment, add and less already debited in the profit and loss account. Then there is an additional information. And finally, compute what? Compute the total income of the company and the tax liability for the assessment year 23-24, assuming the company opts for the concessional tax regime under section 115BAA. That is it. So now our entire thought process will be as per 115BAA. Now the total turnover of the company for the previous year 2021 was rupees 402 crores. Is that turnover has got any relevance in this regard? The total turnover of the company for the previous year 2021 was rupees 402 crores. Is this turnover has any relevance, students, in this context? Answer is no. The turnover is only when the normal provision is made applicable. What is the normal provision? We discussed already at the start of it. So therefore, if that is applicable, then on the balance total income, whether the tax rate would be 30% or 25%, for that it was relevant, not for this. Not for this one, students. Okay. Now you are good to go to read quickly the adjustments and all. Now let's have a look. So therefore, the mind is conditioned to 115BAA. In 115BAA, the two things that we all are aware. What are the two things? Whatever is the total income which I'm going to compute under 115BAA, on that total income, students, if there is any special income, the special income will be at the special rate, and the balance total income will be at 22% rate. Plus surcharge plus HEC. Any case that we'll do it at the end in our solution. Piyush, Karthik, Aishwarya. So I hope that you are clear with this proposition, students. Okay, now let's quickly run through this particular adjustments. So depreciation calculated as per the useful life of its asset. How much is that? 280. Add back. Donation of rupees 12 lakhs given to political party. Disallow. The company has paid 50 lakhs on 15th of August 2022 to a research institution recognized and notified by the central government, which has its object of undertaking. Now donation, students, 35 donations, I told you already. 35 donation already I told you. Add back. No deduction in 115BAA or 115BAB. Dividend received from foreign company 15 lakhs in which it holds 30% equity share capital. This received would be eligible for ATM. Okay, but for that we have to see how much it has paid up to a month before the due date of filing of the return of income. That we'll see later on. Point number 5. Long-term capital gains of 4 lakhs on sale of equity shares on which STT was paid at the time of acquisition and sale. 112A. Now on this 3 lakhs we will be charging in this context. In this situation, can you see that, students? What exactly it is? 1 lakh indeed has to be removed. 1 lakh has to be removed, students. And after 1 lakh, students, you can see the net amount. Can you see this net amount, students? All of you? So the net amount 3 lakhs is what would be subject to this particular rate. The net amount of 3 lakhs is what will be subject to this particular rate of 10%. Now let's have a look, students, to the next one. Now, students, in this regard, if you all will see over here, yes. Now, students, have a look. Interest, this is very important, students. Interest at 10% per annum on 4 crore 20 lakhs. This is very important, very important adjustment. On 4 crore 20 lakhs being amount borrowed from SBI on 1st of June 2022 for purchase of machinery. The interest outstanding as on 31st of March 2023 was paid on 1st December 2023. Means next year after the due date of filing of the ROI. Okay, be careful. This adjustment is going to come again after some time. Profit of 8 lakhs on sale of plot. So students, the total income question, only these two has to be referred. Rest you don't have to involve yourself. These two questions are sufficient for you to have got that confidence that I have done the practice. Okay, that is it. Nothing should go beyond that. Even the presentation is immaculate. That is precisely how I dealt in the class. Students have copied it and I have taken their notes and I have given it to you. Profit of 8 lakhs on sale of plot of land to PQR Limited, an Indian company, the entire shares of which are held by Diamond Industries Limited. Entire shares, 100% holding subsidiary. And if there is any transfer of capital asset between them, then under 47 it is considered as not a taxable transfer. Not a taxable transfer, students, and that's exactly what it is. So now the plot was acquired on 30th of June 2021. Okay. Point number 8, salary of 1 crore to foreign technicians for installation of machinery at the factory premises was paid. Installation of machinery at the factory premises was paid. So students, in this case, be careful. This is for installation of plant and machinery. Salary has been paid. What I'm supposed to do? This is an expenditure which is incurred to bring the asset into existence. Can I say that? For installation and commissioning, the expenditure is incurred to bring the asset into its existence or to put it into its working condition. And if any expenditure which is incurred to bring the asset into existence or put into a working condition, then the same has to be capitalized. So students, this will be capitalized in this case. So we are going to capitalize the same in this particular context. I hope that all of you are clear with this one. So add to that, to the actual cost. Point number 9. The company sold automobile part for 22 lakhs to Messrs. ABC Company Engineer or sole proprietary concern on 1st of November 2020. On 1st of February 2023, 12 lakhs was written off in the books as bad debt. Students, it's bad debt adjustment. I will tell you later on. Okay, later on we will do this. Bad debt adjustment. Additional information. Depreciation computed as per income tax rules 1962. How much is that? 1 crore 50 lakhs other than on the addition in the asset made during the year. Addition made on the asset during the year. What is the addition? Office building 3 crores put to use on 15th of December 2022. Depreciation rate would be 50% of the normal rate. Computer students would be, in this case, 25 lakhs put to use on 11th of May. The normal rate of computers will be applicable. Thereafter, students, if you see plant and machinery 5 crores install and put to use on 1st of Jan 2023. So this is the most important part. Now we'll discuss that, but the dividend declared and distributed. The dividend declared and distributed for financial year 2023 on 31st of May. How much is that? So how much they have distributed? 12 lakhs. Now dividend received was how much? By the way, students, dividend can be received from anyone. Huh? It can be received from a domestic company or it can be received from the foreign company. So here I am receiving a dividend from foreign company. I'll get a deduction. So how much I have received a dividend? I have received 15 lakhs. Okay, but how much I have paid? I have paid 12 lakhs. So what is the maximum amount of deduction under ATM? Would be 12 lakhs. So 12 lakhs would be the maximum amount of deduction. Now coming on this plant and machinery part, students, be careful. It has been put to use on 1st of January 2023. There are some information which has been given to you above. Which are this information? The information was of foreign technician. So on that particular 5 crores, 1 crore will be added of salary. On that 5 crore, 1 crore will be added of salary, which will make it as 6 crores. All of you agree to this one? And thereafter, students, you can see over here. Thereafter, students, you can see over here. What is that? Be careful. The interest. Can you see this? This was the loan which was purchased for plant and machinery. When the plant was put to use? 1st of May. So tell me, from the month of 1st of June when the loan was taken on which date? 1st of June 2022. Till the date when the asset is put to use, the interest has to be capitalized. The interest has to be capitalized, students. You will capitalize the interest. But please understand this, that the interest remained outstanding even after the due date of filing of the return of income. And it was paid only in the next year, 1st December 2023. So even up to the due date of filing of the ROI, the interest continued to remain outstanding. So therefore, the question to all of you is that whether the interest expenditure which is outstanding, will it be capitalized even if it has not been paid? Can it be capitalized even if it has not been paid? To that the answer is yes, students, it can be capitalized even if it has not been paid. I hope that all of you are aware of it. All of you are aware of it. Yes, it can be capitalized even if, students, it has not been paid, for the only reason that, are you aware of it or not, students, that actual payment of interest expenditure is required only in the case of, only in which case? Where you are required to do what? Indeed. So actual payment is required only in the case where you have to get deduction, and you can get deduction only after the asset is put to use. So only that interest from 1st of Jan 2023 till 31st of March 2023, this portion of interest is only eligible for deduction. But since you have not paid the interest, the deduction will not be allowed under 43B. And therefore, the capitalization for the period from 1st June 2022 to 1st of Jan 2023, whether the capitalization, will that be allowed? Answer is yes. The capitalization, students, will be allowed in this case. I hope that all of you are clear with this one. Now, students, see the presentation part. Beautiful presentation. Net profit as per the books. The first thing always in your solution, students, first you should, what you do in the total income computation, all you should ensure to eliminate the income from the other heads. Eliminate the income from the other heads. So therefore, what is that you're going to eliminate? Long-term capital gains, profit on the sale of land, in this case LTCG, and thereafter dividend received from the foreign company. So there are 3 incomes which are not chargeable under the PGBP. Which are those 3 income? LTCG of 4 lakhs, profit on the sale of land, although that profit on the sale of land, that is credited. It is not a taxable transfer, but first at least remove that. And then the IFO's dividend, also you will remove it. And then you get the net profit for business as per the books, which is 9 crore 23 lakhs. 9 crore 23 lakhs. And now you do all the adjustment as we discussed. So now I'm going to only the critical ones, students. Now see over here, the interest portion. Now interest fully it has been debited. The interest fully it was being debited. They have told now already from which period to which period. Students, they have debited the interest from which period to which period? Indeed, from 1st June 2022 to 31st March 2023. The interest has been debited. Now that interest which has been debited from 1st June 2022. So 1st June means for 10 months, students. 10 months at 10%. 10 months at 10% on 4.2 crores. How much is this? 35 lakhs. Now this is disallowed primarily not under 43B. It is disallowed. 35 lakhs. It is disallowed. Now why it is disallowed? Because in this 35 lakhs there is some portion which is to be capitalized for 8 months. That portion is to be capitalized. The reason of disallowance is 8 months it has to be capitalized, and 2 months, 2 months what you have to do? For 2 months it is to be disallowed under 43B. That's the reason why we are adding back. 35 lakhs has been added back in this context because of this particular factor. The 8-month period of the interest is capitalized and 2 months has to be disallowed under 43B. Salary paid again disallowed. Why? It is to be capitalized with the cost of plant and not as allowed as deduction. It is to be capitalized as a cost of plant and not to be allowed as deduction. Bad debt, students, will do it last. Bad debts part. Now you come to this depreciation allowable under the income tax law. Now be careful, students. Please have a look. Already the depreciation under section 32 that they have given to us in the question is 1 crore 50 lakhs. Already the depreciation that they have given to us is how much? 1 crore 50 lakhs. Now thereafter, students, if you see the building 3 crores, 10%, but put to use was less than 180 days, so 50%, which is 15 lakhs. Computer at 40% on 25 lakhs, put to use is more than 180 days, that is what it is. Plant and machinery, students, now be careful. 5 crores is the actual cost, the cost that they have given to us in the question, plus 1 crore is the technician fees to be added, capitalized, and this 0.245 crore in that addition, I told you, 8 months. So already it is there. So 35 lakhs. So in that 35 lakhs, around 24 lakh 50,000. In that 35 lakhs, around 24 lakh 50,000 represents the interest from the period of 1st of June 2022 to 31st of December 2023. Sorry, 2022. From 1st of June 2022 to 31st of December 2022, that is a period of the interest for which what you are going to do, you are going to add it back to your actual cost. And now your actual revised actual cost is 6.245 into 15% into 50%. So therefore that is the point, and therefore now you have got the depreciation combined, and this is what will be your PGBP. Once you get a PGBP, you have the LTCG 4 lakhs. Okay, profit on sale of plot of land, nothing is taxable. Dividend received 15 lakhs. GTI is there, and thereafter from GTI, ATM already discussed 12 lakhs, and thereafter this is the point. Now coming to the tax liability, students. Now please see the tax liability LTCG, which you can see over here on 112A. 112A, how much is that? 4 lakhs minus 1 lakh. On 112A, 4 lakhs minus 1 lakh, students, in this case is how much? At 30%, 30,000. And the balance total income, students, for the balance total income, which is in this context, now balance total income is how much? Be careful, don't use 3 lakhs. This is again a silly mistake. Do you remember this? See, please understand, students, your LTCG is 4 lakhs. Please be careful. This is again a silly mistake that all of you are going to do in the exam. Please don't say LTCG as 3 lakhs. Your LTCG continues to remain as 4 lakhs. While calculating the tax at that point of time, on 3 lakhs you will charge 10%. On 3 lakhs you will charge 10%. I hope that all of you are clear with this one. Now, how much is your balanced long-term capital gains? 11 crore 75 lakhs 16,250 minus from that 4 lakhs. Minus from that 4 lakhs, and on that 4 lakhs 22%. On that 4 lakh 22%, which will give you 2 crores 57 lakhs 65,575. And then you add to that the surcharge, students, which is there, and then you add HEC, and therefore you get your net tax liability, which is 295 10 137.8. This is what you get it, students, in this regard. I hope that all of you are clear with this one, students. Every one of you. So this is what it is, students, in this context. Now the bad debts part, students, just very quickly we will discuss this particular part in this context. So if you see over here the bad debts adjustment, let's do this, and the last question after this, students, the last question after this. Only one particular part on the bad debts, where it went. Yeah. So the company sold, students, adjustment number 9. The company sold automobile parts for 22 lakhs to Messrs. ABC Co-Engineers, a sole proprietary concern, on 1st of November 2020. On 1st of November 2020. On 1st February 2023, 12 lakhs was written off in books as bad debt. So out of 22 students, 12 lakhs has been written off. So how much is outstanding debtors after write-off? Outstanding debtor after write-off is 10 lakhs. So out of 22, I have written off 12 lakhs. So out of outstanding debtor is how much? 10 lakhs. The sole proprietor died on 1st of March 2023 and the company managed to collect how much? 11 lakhs towards full and final settlements. So now 11 lakhs is a full and final settlement. Now out of this 11 lakhs, can I say this 10 lakhs? Out of this 11 lakhs, 10 lakhs is attributable to the outstanding debt. 10 lakhs is attributable to outstanding debt. So that's recovery of outstanding debt, and then balance 1 lakh is recovery of bad debts. Balance 1 lakh is what? Recovery of bad debts. And recovery of bad debts, is it a deemed income under 41.4? Yes, it is a deemed income under 41.4, and that's exactly what it is. With that, students, we are done with this one. Now the last question, students. ABC Limited, a manufacturing company, is engaged in the manufacturing of leather products. Now obviously, whenever this leather, apparel and footwear is concerned, 3 items. Which are the 3 items? Leather, apparel and footwear is concerned. What is the point that comes to your mind? In that 80JJAA, we have got 150 days minimum number of employment for the new employees in the current previous year. And other than these 3 sectors, the minimum number of days of employment of the new employees should be 240 days. Okay, so always keep that point in mind. Leather, footwear and apparel. So ABC Limited, a manufacturing company, is engaged in the manufacturing of leather products since 1st of November 2020 in the state of Tamil Nadu. As per the statement of profit and loss account for the year ended 31st March 2023, the company showed profit of rupees 120 lakhs after debiting credit of the following. What is that? I told you how to refer the answer. So you just see the structure. Okay, all these are add and less. 1 to how much? 1 to 11 point is already debited and credited to the profit and loss account. Then there is an additional information, and finally the final question is the last line. The company have opted for 115 BAB for concessional rate of tax regime. 115 BAB, students, compute the total income. So this is 115 BAB. Be careful, there are multiple tax rate which we have discussed already. Now with that one, students, in this case, ABC Limited, a manufacturing company, is engaged in the manufacturing. Now tell me one thing, opening and the closing stock for year were 55 lakhs and 45 lakhs respectively. Opening stock was overvalued by 10% and closing stock was undervalued by 10%. So obviously you need to do the relevant adjustment. Opening stock overvalued. Overvalued means the debit is more. Debit is more means profit has come down. If the profit has come down by 10% because of the overvaluation of opening stock, you will increase the profit then. Similarly, in the closing stock, in this case, it is undervalued by 10%. Undervalued by 10%. Again, if the profit and loss account credit side undervalued by 10%, the profit has come down. If the profit has come down, you have to increase the profit again by 10%. So in this case, so this 55 lakhs is overvalued, no? So it is 110. It is at 110%, and this 45 lakhs, it's undervalued. It is at 95%. So one is at 110%, another is at 95%. So accordingly, you need to square up. Sorry, 90%. Accordingly, you need to do this thing and get the difference. ABC Limited paid rupees. What should this? Now ABC Limited paid rupees 10 lakhs in foreign currency as a sales commission during the year without deducting the tax at source to Mr. John, a citizen of USA and non-resident, for procuring orders from outside India. Outside India. Orders are procured outside India by a non-resident. Therefore, the income of that agent is accrued outside India, because he is sourcing the order outside India from the buyers outside India, and hence the agent commission is also accrued outside India. And if on that, if no TDS is deducted, absolutely no disallowance will take place. Absolutely fine, no disallowance, because accrual is outside India, so it is not chargeable. If it is not chargeable, then there is no question of deducting the TDS on such particular amount. Point number 3, 45,000 was paid in cash to Mr. Raj, an employee of the company at the time of his retirement. So at the time of his retirement, students, paid in cash. Now there is rule 6DD which says that at the time of retirement, up to rupees 50,000 in cash you can make the payment. Up to rupees 50,000 in cash you can make the payment. So therefore again on this point there is no disallowance. Point number 4, profit on sale of 2,000 shares of VKL, a listed company, 3,50,000. These shares were sold on 7th of October 2022 for 250 per share. The highest price quoted on the stock exchange on 31st of Jan 2018 was 175 per share. The said share were acquired for rupees 75 per share on 10th of June 2015. STT was paid both at the time of purchase and the sale. So it is 112A. In 112A, students, do you know how to calculate the cost of acquisition? This is done in 2 steps. In step number 1, the cost of acquisition would be the lower of what? The full value of consideration or the fair market value as on 31st of Jan 2018. Now if you see, students, over here the full value of consideration that they have given to you is 250. And the fair market value as on this date is 175. So what is the lower of the two? 175. Now that is the eligible value. From step 1 it is 175. So step 2 would be higher of. Step 2 is what? Higher of what? 175. And this 175 will be compared with what, students? This 175 would be compared with what? This 175, students, will be compared with what? Quickly! Actual cost. Actual cost, students. This is actual cost. Now whichever is higher. So what is higher in this case? 175. So therefore higher is 175. So 175 finally will become the cost of acquisition. So 175 will become what? The cost of acquisition, and therefore this would be the cost. What is selling price? Selling price is 250, and therefore finally your capital gain is 75 per share into number of shares. That is the total amount. And be careful, it is a long-term capital gains. So when you calculate the tax on that long-term capital gains, you will reduce 1 lakh, and on the balance you will apply 10%. Now coming on to point number 5, students. STCG derived from transfer of capital asset on which no depreciation is allowable under the Act. On which no depreciation, students, no depreciation. So if it is a no depreciation case, it will go at 22%. Okay. Had it been a depreciable asset, and the short-term capital gains, then this would have gone at 15% rate. We have discussed already this point. Now point number 6, profit of rupees 6 lakhs on the sale of plot of land to XYZ Limited, a domestic company. XYZ Limited, a domestic company, the entire shares of which are held by the SSC 47, not a taxable transfer. Credit to the profit and loss account include a dividend of 50,000 received on 6 September from a domestic company. ATM deduction, subject to ATM deduction. But by the way, be careful, students. Point number 5. Point number 4. Point number 5. Point number 6. Point number 7. What are these points? 4, 5, 6 and 7 in the question are all relating to the other heads other than PGBP. So I told you already, my first step in my competition will be eliminating these items to be considered separately, isn't it? And that's what I am going to eliminate, and first I will compute PGBP and thereafter the other heads. Now coming to point number 8, 20,000 paid for the expansion in connection with inauguration of new branch open for expansion business, all out. 9, 20,000 paid as a penalty to the government for the company's failure in performance of a contract within stipulated time. There was a delay of 4 months, and accordingly the company had to be paying a penalty of 5,000 per month to the government is it a penalty under the law or it is a contractual penalty? It is a contractual penalty, and because it is a contractual penalty, students, therefore there is no disallowance in this case. Okay, there is no disallowance. Had it been a penalty under the law, disallowance would have been made applicable. The amount of 5 lakhs was paid to the manager of the company in this case under the VRS. VRS only 1/5 is allowed. 5 lakhs is debited, so you will add back 4/5, so that only 1/5 is debited finally. So you will add back 4/5. Interest of 75,000 paid by bank remittance on deposit made by non-resident buyers of goods manufactured by the company. Interest of rupees 75,000 paid by bank remittance on deposit made by non-resident buyers of goods manufactured by the company. The said payment were made outside India without deduction of TDS. So what will happen, students? Interest paid for a loan which I have taken. Now please understand, is the interest income accrued in India? In this case to this non-resident buyer? Yes, it is accrued to India because the Indian company has to make the payment of interest. An Indian company is paying for their business in India. So who is paying? Indian company is paying. To whom they are paying? To the non-resident. So therefore, the interest which is paid to the non-resident without TDS, 100% disallowance. Now students, if you see over here, on financial year 22-23, the company has employed 56 additional employees. All these employees contribute to a recognized fund. 39 out of 56 employees joined on 1st of June. I already told you, you have to see 150 days. So obviously students, this 39 employees would be eligible because 150 days are there. 14 joined. Now, for this 39 out of 56 joined on 1st of June 2022 on a salary of 15,000 per month. 15,000 per month salary, students. Will it be disallowed? No, it will be allowed because the salary amount is also not more than 15,000, 25,000. 14 joined on 1st of July 2022 on a salary of 45,700 per month. Will it be disallowed? Yes. Disallowed means it will not be allowed under 80JJAA. When I've used the wrong word, disallowed, it is not to be allowed under 80JJAA. 3 joined on 1st of November 2022. Now this 1st November 2022 at a salary of 22,000. Is it 150 now? November 30, December 31, January 31, February 28, March 20, 31. Is it 150 days, students? Quickly! For this 3 employees, the salary of 9 employees who joined on 1st of June 2022 are being settled by bearer check every month. The salaries of 9 employees who joined on 1st of June 2022 are being settled by bearer check every month. 151 days. Karthik has already calculated 151 days. So 151 days, students, in this case. So yes, it will be eligible. The salary of 9 employees who were joined on 1st of June 2022 are being settled by bearer check. Bearer check, students, you should be aware of this point that if it is the first year of the operation of the company, then only 80JJAA allows the check to be given through cash. So the salary to be given in cash or through bearer check. If it is the first year, then 80JJAA will allow this mode of payment. But if it is not the first year, which is the case in this question as well, then this payment made otherwise than by way of the banking mode will not be eligible for 80JJAA. Now, by the way, students, please be careful. Huh? It is neither going to be eligible for 80JJAA. Now, don't you think that, students, this salary which has been paid, say in cash, for 9 employees, which has been paid in cash by bearer check, don't you think that, students, that salary would have been debited to the profit and loss account? That salary would have been debited to the profit and loss account, and because it would have been debited to the profit and loss account, disallowance would have been attracted. Will the disallowance of 40A3 will come into play or not? Yes. So therefore, this 40A3 plus no deduction under 80JJAA, both of them will get triggered concurrently. Coming to point number 2, the company has paid through bank 1,20,000 to National Fund for Rural Development, 35 CCA. Will that be allowed, students? Answer is yes. Now the company has opted for this one, and that is exactly what it is. By the way, students, the company which opts for 115 BAA and 115 BAB, do they get MAT? Answer is no. No MAT is there in this case. Now, net profit as per the books is 1 crore 20 lakhs. Item chargeable in other head should be considered separately. Which are the head? Capital gains head. The 3 incomes of capital gains and 1 income. There were 4 items. No? Of that 4 items, 3 were of CG, 1 item was of IFOs. So the 3 item of CG, which is credited in the profit and loss account, removed. 1 item of IFOs also removed. Now the common adjustment. This add, the profit has to be increased by overvaluation of opening stock and undervaluation of closing stock. The profit has to be increased, and this is the increased amount in this case. Thereafter, sales commission paid to NR, no disallowance, so nothing has to be done. Payment made in cash to the employee at the time of retirement, if it is not going more than 50,000, no disallowance. Expenditure in connection with new branch, not disallowed, allowed as deduction, so therefore no adjustment. Penalty for non-performance contract, because it is not a statutory penalty, allowed as deduction, so no disallowances. That VRS 4/5 would be added back, 4 lakh is therefore added back. Interest paid without the TDS, because the interest is accrued to the non-resident in India, therefore chargeable under the Act. And if it is chargeable under the Act, the TDS should have been deducted by the payer at the time of payment, at the time of making the payment, which is not the case, and therefore interest would be added back. Salaries of the 9 employees, which we discussed just now. How much was that? 15,000 per month for 10 months, because they got employed on 1st of June. No? So 9 employees at 15,000 per month for 10 months. How much is the total salary paid in cash? 13,50,000, add back. Now see, this is what this information of rural development was not in the debit and credit side. Do you realize that, students? This was in the other information, additional information. And because it is in the additional information, not in the information of after the debit and credit, therefore this has to be separately has to be reduced under 35 CCA. This is what the error you can do it. So please appreciate the fact that those in the additional information, chances are very high that these information may not be captured in the add less. And if it is not captured in the add less, please reduce it and make it adjustment separately. Now PGBP is there. Capital gains already we discussed. Capital gains would already be discussed. So how much is the capital gain? 1,50,000. In that 1,50,000, 1 lakh is exempt, and therefore only 50,000 at 10%. Short-term capital gains on the non-depreciable asset on the transfer of the land. In this case, on a non-depreciable asset, students, is 75,000. So 75,000 STCG on non-depreciable asset. Transfer of the land, students, transfer of the land, exempt 47. IFO's dividend 50,000 GTI 1390, and thereafter 80 JJAA, students, which you already have discussed in this case. So this many months, the eligibility, and on that 30% is the amount. This is the amount which comes into picture, 14,49,000. This is an amount which comes into play, and therefore you get what? Total income. Now what about the ATM? ATM, students, dividend, because you have received a dividend, no? But did you pay the dividend? Any information about dividend being paid in the question, students? Any information of the dividend being paid? No information. So therefore no ATM deduction, students, in this case. Can you see that? So only 80 JJAA deduction has been given. No deduction of ATM has been allowed in this case. Now please be careful over here. In this case, so total income is how much? 1 crore 24 lakh 56,000. Now on that, be careful. PGBP 50. Now you can do, students, I will suggest you one thing. Instead of doing like this, don't take the surcharge here. Take the surcharge last. Otherwise you will unnecessarily waste a lot of time. So 15%, calculate that. 10% on 50,000. 50,000 already discussed. 1,50,000 minus 1 lakh. Then short-term capital gains, I told you on the transfer of non-depreciable asset. Non-depreciable asset 22%. And on the IFOs 22%. So therefore 15% is the PGBP income. LTCG special rate is already there, and remaining are the other income. So this is LTCG is a special rate. So special rate, so special income, special rate, PGBP at 15%, and other income. Other income is STCG on non-depreciable asset and IFOs would be at 22%. Once that is done, then you add the surcharge flat. Don't add surcharge for each of the item. Add surcharge on that consolidated tax amount, and then add 4% of HEC. Now please be careful, students. This is an important presentation. 212717439.6. You need to round off to the nearest 10. Now students, this wraps up the alternate tax regime for the company. Now this you will have to do it now. Now students, this I'm sharing with all of you in my Telegram channel also, in CA Durgesh Singh. This question is taken from the MTP, this cooperative society. So this revision would be from this one. I will tell you the timeline. Hardly it is 15 minutes. You will finish it off this, but this needs to be done. Cooperative Society 115 BAD. So 115 BAD is explained through this beautiful question, because there is also alternate minimum tax. There is also AMT in this particular case. So AMT is also being discussed. Beautiful question, students. Nothing can beat this particular question. This has to be done, both for either 115 BAD or for AMT, as the case may be. So one of the beauty is this one, which I will just share you that video, and I will also tell you the time description from which time you're supposed to see this video, so that you can finish it off in that 20 minutes, this video, and then wrap up 115 BAC. Wrap up, students, 115 BAC. Okay. After this, students, what now? I'm going to meet you in the evening. Now, students, herein we'll meet for TDS and TCS and the trust taxation. These are the two particular things which you are going to meet up primarily in the evening. Evening time, students, would be at 6 p.m. We are going to meet, and at night we are going to meet, students, for math. 1 hour I'm going to do with you math. Tomorrow, students, I already told you the plan which has been there, which all of you requested. Assessment, you requested me to do it, and survey and search. Okay, assessment, survey and search, that particular portion. And I will also do with you updated return. Morning time, this updated return. Okay. Late in the evening, capital gains, only one particular partnership assessment runs. Okay, that is one thing which has been there. But this video, only this up to, if you want to see live, only you will see live up till here. CG and partnership and theory of NR. Okay, that again I will try to wrap it in 35 to 40 minutes. This one. And the last one was that indirect transfer and indirect transfer, students, yeah, of NR. Again, this hardly will take me 15 minutes to finish it off. So that is what primarily I'm going to cover out. Now, students, my request to all of you, PGBP primary, if I have to do it, I will have to deal with it after this only. But Aishwarya, my point is that in PGBP, what I'm going to do, I'm just listing down. Other than that, PGBP, students, you will have to deal with it. I'm just listing down straight away. In this case, PGBP 33AB, 3617A. So don't use the word PGB. This is what primarily I'm going to deal with for all of you. Thereafter, 3618, 3580, 80IA series, and 10AA. This set of section, students, will be dealing with it, which are nothing but profit link deduction or the sectoral provisions. These are the set of provisions. Apart from that, the PGBP, students, primarily you will have to start off immediately. Don't start PGBP, students. PGBP, do it last. Let these things get over. Maybe you can think of dealing with it tomorrow. Please focus now on that surrogate taxes chapter and appeals and revision and clubbing. Please do clubbing, students, without failure. Clubbing this time is going to be there in the examination. Okay, clubbing will be there, students, this time in the examination. So these are the set of section of PGBP which I'm going to deal with it. 33AB, T coffee rubber, 3617A, 3618, 3580, 80IA series to 10AA. This is it. Because I don't want to cluster many provision right now, because I will also require space to prepare for this thing. Because then I am also catching up with those particular things. I will, if I cluster many, the revision may not be that effective, which I don't want it to be, specifically knowing the fact that it is an LDR. When I say prepare, it doesn't mean that prepare for what I have to do, how much I have to do. That is what primarily is the preparation which I'm talking about it. Fine, students. So I'm going to see you now at 6 o'clock in this particular case with the trust, taxation and TDS and TCS. Let's catch up then at 6 p.m. students. Okay. Now don't do PGBP. That does not mean you start with PGBP, students, with section 32. Depreciation, good part has been done. Okay, in this particular context. And maybe if that be the case, I will try to use it. Students, do PGBP tomorrow, remaining part of this. Try to cover up the other topics. Let me see if I might be in a position to pull up ICDS with all of you. That specifically the PGBP part along with that. So my humble suggestion would be, use for PGBP tomorrow. Try to finish it off. Appeals revision, penalties, appeals revision, penalties, rectification, recovery. So your target has to be like appeals revision, rectification, recovery, those topics, penalties. Complete that. Complete the surrogate taxes like the AIF, REIT, business trust, securitization trust, that particular topic. Clubbing of income, that particular topic. Those are the topics that you should try to see off quickly. And chapter 6A, you can try to see the small areas. Is that point clear to all of you students now? Fine, students. See you then in this regard, students, in the evening now. 6 or 6:30, students. I'll just confirm the timing. Piyush, I told you na, the topic which I already told you. I hope that now you already are aware the topics which you are there in this case, in this context. Okay. So therefore, I think now that point is now very clear to all of you. So from my side, I'm making it very clear exactly what I will be dealing with it. So this is MAT. You can also do partnership assessment, that 40B and all those stuff. That topic is there. AOP, BOI, quickly you can run through that. Okay. Trust, taxation, the high value topics on TDS and TCS. I'll take across this one. I have already listed down this one. So 6:30. 6 or 6:30, I'll still confirm, students, the particular timing on this for all of you. Fine, students. See you then, students. Immediately you have to see that cooperative society. Beautiful question. Your AMT will get revised also in the process. Beautiful question. Okay. See you then, students, at 6:30. Start with your, if I have to tell you, penalty, appeals revision, DRP, penalties, appeals revision, that dispute resolution panel, recovery, and those transfer pricing, students, those who have not yet done transfer pricing, take off with transfer pricing as well. Okay, get started with this. You should be in a position to finish it off in the next 5 to 6 hours, and then let's meet up in the evening for this trust, taxation and TDS and TCS. See you then, students.